What's going on, guys? Welcome back to the channel. We're talking about NIO, baby.
Does it feel good?
The stock has pulled back recently and it's hovering around my initial price target for my financial model. So we're going to discuss what to expect next year so our YouTube family can stay informed and keep printing those fat stacks of cash. Not only that, but also trying to get stupid rich. The Chinese electric vehicle maker NIO said Tuesday delivered 5,291 vehicles in November, up 109% year over year and the highest monthly figure thus far. But for some reason, the stock isn't moving the right direction, so this is where I want to do some digging in. Before I jump in, check out the link in the description from Webull for 4 free stocks. They keep getting more generous with their promotions, so you might as well put $100 in and get 4 free stocks. It's like free money. All right, you guys know I'm all about Tesla, and that's why anytime EV vehicles are in the news, it piques my interest. Anyone with NIO in their portfolio was probably disappointed by this week's dip, and I know this feeling all too well. It happens, the ups, the downs, it's part of the investing game, and you can't let that get you down. Controlling your emotions is just as important as investing strategies itself, but let's take a deeper look into why NIO is going down and take a look at some of the facts. If you need a recap, NIO is a Chinese automobile manufacturer headquartered in Shanghai, specializing in EV vehicles, and the House of Representatives on Wednesday unanimously passed a bill that sets the stage for delisting Chinese companies on the US exchanges, including electric vehicle makers such as XPeng and Li Auto. NIO is a highly valued US listed Chinese EV player, but the good news is it looks like they're in compliance. NIO's spokeswoman said in an emailed statement that NIO was aware of the situation and became compliant over the past few months. Representatives from XPeng and Li haven't returned their requests for comment. If you look at the chart here though, all 3 of these stocks are going down together, guys, and this is called correlation. This is important because what you need to understand, a delisting is scary for an investor, pretty much for all investors. And that means that they would still own the stock, but now the shares are traded over the counter and they're not on an actual exchange. That makes accessing the shares a lot harder and more difficult. Investors did sell off XPeng and Li Auto, but I think that the market sold off NIO a little too much, if you ask me, based on the fear that the other 2 companies were not compliant themselves. NIO stock is approaching my initial price target because there's a greater perceived risk of delisting. However, the numbers keep coming in better and better. We've already seen certain government incentives in the US along with an EV vehicle initiative in California. Ones like these are happening all over the globe, including China. Government incentives in China, including a large subsidy, help us as we move toward an electric vehicle world. Maybe not all electric vehicle world, but half at least in the next decade. And NIO could definitely be a huge competition for Tesla and all-around star in the EV space, especially in China. I think the company is approaching a point where it's too big to be delisted. I mean, sort of, you know how like big banks are too big to fail? Well, I think this Chinese company is going to be a little bit too big to delist at this point. I know they're talking about, you know, Baba and JD and other Chinese stocks as well, but I don't think it really makes sense for the US to get rid of access to EV stocks in China. That's pretty silly in my opinion. And I did mention that delisting could happen in my previous videos, but I would say that it's not very likely, especially because the NIO spokeswoman herself now told us that it looks like NIO is compliant, and also United States doesn't really want to cut all the access from our money going into China because we could significantly benefit from stocks like NIO, Baba, JD, and all the other Chinese stocks. So what happened? Is it really just a delisting that everyone is worried about? And how come the huge dip this week? After all, NIO's monthly sales records have really impressed some investors. Their sales are gaining attention to people like Goldman Sachs analyst Fei Fang. Fei Fang updated NIO's neutral target basically from sell, and that was kind of a big decision from her. And I'll tell you why it was such a big decision, because she raised the bank's price target on the stock to $59 per share from just $7.70, guys. That's right, this analyst was so confused. She's like, you know what, $7 too small, let's go up to 59. She totally changed her mind, and I think that's a very impressive price change. The analyst really did underestimate the growth potential unlocked by NIO's battery as a service program, which lowers upfront costs for buyers, and I think is going to be a very attractive option for many consumers. But still, either the fear of a delisting seems to be more front and center. However, I want to let you guys know that they have 3 years to be compliant with the US rules. They also have top class auditors. Auditors are professionals that check accounting practices and numbers of companies. And obviously with some of the recent stuff going on in China, these auditors aren't really joking around. Like, there's not like a Luckin Coffee. You know, NIO really is an EV player that's growing tremendously, and they're not going to be fabricating the numbers from what I understand. Why would they actually do that? Especially because there's increased scrutiny lately since we had some of those bad apples over in China. I think we'll have to wait and see for more news to come out, especially as Treasury Secretary Steven Mnuchin and Securities and Exchange Commission Chair Jay Clayton continue to work on these matters, and it's going to be really interesting to see what comes in the next few weeks. As investors, we can't control a delisting. Staying focused on proper risk exposure and the numbers and the facts is really the best thing that we can do, and the numbers don't lie. For NIO's vehicle margins for Q3 2020, it was an impressive and an amazing 14.5 as opposed to the negative vehicle margin of 6.8% in Q3 2019. Even on a quarter-on-quarter basis, the company's vehicle margins has really improved. I've said this in particularly half of my NIO videos that this is the most important metric aside from gross sales and vehicle deliveries, because the margins are going to be the most important for the bottom line of the company. To me, I'm actually growing more confident in numbers as the stock is pulling back and it's presenting a better opportunity for entry. Hopefully the potential vaccine coming any day now could result in very high economic growth, not only for the US, but China and all over the world, and that would significantly benefit someone like NIO. All signs point to sales numbers continuing to outperform as a year-over-year basis, and it looks like it's going to be very promising going forward. So now I want to talk a little bit more about the financials and the risks. As I record this video on Friday, shares are around $42 per share. You can see the chart right here. This dip looks like an opportunity for long-term investors, in my opinion. On November 23rd, the stock was over $55 per share and now is trading at a significant discount compared to those levels. The dip may be a good reason to get in while you can. Tesla is currently $585 per share, as you can see on the chart right here. So if you're looking to get into the EV market for your portfolio but don't want to spend more than $500 per share for a stock, NIO might be a good place to start. Even despite the dip this week, if you're a long-term investor, this company has a lot of opportunity and growth potential going forward. Especially if you're properly diversified, having access to Chinese companies, especially because China is such a growth engine, I think it makes tremendous sense for all investors, especially if you're in the Western world like US, Canada, and Australia. In general, I can see NIO growing faster than expected into something like a baby Tesla. In China, the recognition that NIO gets is already like a Tesla in America. As the total revenues continue to skyrocket, that's going to help the company achieve a better bottom line. In fact, guys, China is targeting a new energy vehicle or NEV sales up to 20% of total car sales by fiscal year 2025, which is why I was talking about we're gonna go towards 50% sooner or later in the next decade. And further, by 2035, NEV sales are targeted to be about 50% of total car sales. And I think we're actually gonna get there a little bit sooner than expected. Given the market potential, multiple players can grow at a strong pace. I don't see a problem with that at all. That includes NIO and Tesla gaining massive market share across pretty much the Asian continent, but also maybe into Europe in the coming future. And I see both of them really dominating those markets. For me, I actually sold some of my NIO stock in my Robinhood portfolio to execute option strategies on Tesla, but I'm planning on using the money that I make with options this week to purchase NIO on Monday. On December 1st, I started selling NIO at $49 per share because I wanted to have a concentrated position in Tesla and increase my risk over there. And my thought process was basically exactly like I teach in my weekly option income academy. I wanted to execute something called a wheel on Tesla in my Robinhood account so I can collect consistent weekly income. Well, now NIO stock has fallen more than 10%. In fact, nearly 14% since I sold less than a week ago, and I'm thinking about jumping back in this coming Monday. I'll probably jump back in with 100 shares on NIO stock in my Robinhood portfolio, and I see this stock pretty much being a very good bet at this moment since it has pulled back such a significant amount. And I do have NIO in a couple of my other long-term buy and hold portfolios that I also discuss on Patreon. And essentially, I'm going to be buying 100 shares on NIO, and I'm also probably going to be selling some more puts on NIO because I want to have a better entry price. And I think a good entry price for NIO, according to the financial model video, which you can watch over here, I think it's about $43 per share is a fair price. And if you're going to get in on NIO under 40 per share, you're getting a pretty good bargain in my opinion. You know, studying Warren Buffett, and one of his principles is that when a stock goes lower, the risk actually goes lower, because think about it, as the stock goes lower, the risk actually goes lower as well, because as investor Warren Buffett says, the lower a stock goes, the lower the risk is, because you have less room for the stock to fall more on you. So I'm more comfortable reinvesting my money back into the stock as it goes lower, and I think these levels are presenting some opportunity here to jump back in on the NIO EV Express. We'll see what happens. I'll definitely come up with another video very soon. If you need help with options trading, you can check out the course below or add me on Instagram right here. Either way, I hope you guys enjoyed this video. I love you guys. Enjoy the weekend, and let's all kill it as always when the market is open next week. I'll see you champions in the next video very soon. Be aggressive in learning, but be safe in investing.
No one ever sees me.